Yo, what's good, everybody? Today I will be continuing my introduction to trading series, and we will be focusing on how to read candlestick charts. All these candlesticks may look complicated at first, but I promise you it will get easier as you put in more screen time. So when I first got into trading, I was using the Robinhood app, and it only showed a single line for the price of a stock. See here. Then I switched to Thinkorswim and candlestick charts because it provided more information on the movement of price. So later on in this video, I'll be showing you guys my trading strategy and examples of how I use candlesticks for my strategy. But for now, let's dive into the structure of candlesticks. So how are candlesticks actually formed? Well, candlesticks are made of two main parts, body and the wicks. Body and the wicks are formed by the OHLC of a candlestick. OHLC stands for open, high, low, close, and it's basically what the name says. The open is the opening price of the candle, high is the highest price of the candle, the low is the lowest price of the candle, and the close is the closing price of the candle. This is all relative to the specific time frame you're viewing the candlestick in. Depending on where the candle closes from the open, it forms either a bullish or bearish candle. If the candle closes higher from its open, that's a bullish candle. And vice versa. If the candle closes lower from its open, that's a bearish candle. The open and close determines the type of candle it is. Now, the size of the candle body determines how strong or weak the candle is. Candles with larger bodies represent stronger candles, while candles with smaller bodies represent weaker candles. The length of the candle wicks determine buying or selling pressure. Longer lower wicks represent more buying pressure, while longer upper wicks represent more selling pressure. Small bodies and equal sized wicks on both sides represents indecision and a neutral bias. In most cases, you want to trade when there is interest in the market, so pay attention to candles with larger bodies and smaller wicks. These were some of the basics of a single candlestick. There are traders who go deeper into it by combining multiple candlesticks to form patterns. I won't go into detail about patterns as I don't trade patterns, and you guys can look that up yourselves. But what I do trade is supply and demand. Our trading strategy involves supply and demand zones. These are areas of interest where I look to sell or buy whatever I am trading. If you look up on Google, supply zones are areas where selling interest is high, traders are willing to sell at a lower price, which causes prices to fall. And demand zones are areas where buying interest is high, traders are willing to buy at a higher price, which causes prices to rise. Remember what I said earlier about trading when there is interest in the market? We retail traders are all small players in the market. The bigger players are the institutional traders on Wall Street, the hedge funds, the banks, and the millionaires, billionaires. They are the ones that can move the market, so why not trade on the same side as them to catch a piece of the move? Don't look too deep into it though. I just view supply zones as areas to short or sell and demand zones as areas to long or buy. So how do I spot my supply and demand zones with candlestick charts? I keep it simple. Look for areas near a high or low of a price leg that has a small candle followed by a larger candle in the opposite direction. For example, when marking my supply zones, I want to find a small bullish candle followed by a larger bearish candle. You want to see this done at a high of a price leg to represent a reversal to the downside. After you have this supply zone marked out, you want to see price come back and retest the zone and continue to the downside. My thought process is the bigger players caused this huge move down. So when we retest this area, they would want to reload and continue in the direction they intended. The demand zones would be drawn the opposite way. You want to find a small bearish candle followed by a larger bullish candle at the low of a price leg to represent a reversal to the upside. I did not invent supply and demand. I learned it from this person named Carmine Rosado, this guy right here, and created an edge with it that fits me personally. If you guys want to learn more about supply and demand, I recommend going through his channel. He has a lot of videos that gives you a lot of examples on how he makes his zones and stuff like that. He'd probably go back to like 2 years back though, because he kind of switched up his teachings a bit with order flow now. But let's show you guys some examples of me trading in real time using supply and demand. Alright guys, so this is the first example of my live trading session with supply and demand. Trade was from, I believe, last week. It was on the 25th. 25th right there. And the trade was on the 25th of February. The zone that we took was a demand zone from February 3rd. Right here. We had a overnight gap down. And price made new lows and higher lows. During the intraday session, created this red basing followed by a strong green momentum to the upside. Remember what we said about demand zones? You want a bearish basing candle, small one, and then followed by a larger bullish green candle. We had that right here. And let me just mark it out for you at this 21215.25 level. And then from that level, you want it to retest, right? Price moved up from that area. Never retested until February 25th, where I took the trade. And we go down to the lower time frame. February 25th on the lower time frame, where the trade happened, is right here. We took this trade at the 21215.25 level at 9:53 a.m. on February 25th. Drawdown was at most around like 4 points. The return could return like 77 points. But I have my set take profit and stop loss, yeah, which I will show you in the live trading session. I'm going to leave the audio from that trading session instead, so you guys can see my thought process during that day. Alright, filled me in. Want to see a quick wick and back up. 17 points at most. The second retest. This candle should not close back below this level. If it does, I might just exit early. Target filled. Alright, there we go. 2.4R, one and done. I might look for another trade later at this zone if it comes down here, but these are my best trades when they happen within like a few minutes. Less than 5 minutes. You see a wick at a zone and it doesn't come back down after 2 candles. Alright, so you guys just saw the first example of the trade from February 25th. Went to that demand zone from Feb 3rd. Bounced off of it. Gave a good return. 0.4R for me. And then I mentioned that there was a possible entry at the lower demand as well, which I'll show in this next example. I'm willing to take a short right here if it comes back up here. 115, I think it is. What is it? So in between there was also another trade, a retest of the demand where I took long last time. I counted as a break and retest of it. That's a whole different other like strategy part of supply and demand. I'm not gonna explain in this video about it. It's something you just learn with screen time. I'm gonna do this one with less contract and I'll do a 30-point stop instead of the 25. The wick candle, I want to see this candle close back above this level. Alright, this candle closes fine. I want to see this one expand lower now. Is that 45 points now? I'll move it to break even once it hits 50 points. Alright, that's to break even now. Target that. Alright, that's 2.4 for that one. This one I'm aiming for the lower. I'll move it to break even as well. This is the last contract. It's gonna either go to this demand or I'm gonna stop it out for break even. No, I'm still in this runner. This is crazy. It's 140 points right now. Even though it's one micro, like that one runner makes a lot. Oh, almost there. 180 points. Boom. Damn, that's like 200 points. That was crazy. Not gonna lie. All right, but right here, price is nearing that lower demand, and I did not take this trade, but it was the target for my break and retest trade. I'm not gonna explain, but that demand also, this new demand down here also holds as well for a good return. Would have hit my 2.4R as well. Alright guys, those were two examples of trading demand zones. I was going to include a supply zone as well, but I got lazy. Yeah. So I'll do that in the future video where I'll provide more in-depth examples of supply and demand zones. But just to recap what we went over in this video, we did early on the open high-low close of candlesticks and how candlesticks are formed. Bearish candles are basically candles that open higher and close lower. Bullish candles are candles that open lower and close higher. That's all, basically what you need to know, the high and the low points of the candles. Then we went over types of candles. We have strong candles with wide bodies, weaker candles with small bodies. Buying pressure, there's more buying pressure when there is a lower, uh, longer lower wick, and then it's higher selling pressure when it's a longer upper wick. And then we have indecision candles with the smaller bodies and equal size wicks. And then for supply zones, we went over that this is where you want to find a green basing candle and followed by a strong red candle for reversal near highs. When retests the supply zone, you want to see it continue in the intended direction. And then that's the opposite for demand zones. You want to see price to reverse at lows with a red basing followed by a stronger green candle. And when price retests the zone, you want to see it go up. So that concludes the video for today. If you are new to my channel and want to see me trade my strategy in real time, hit that subscribe button and tune into my live trading every morning. Drop a like if you enjoyed this video and want to see more in the future, and leave a comment below if you have any questions. Catch you guys next time. Peace!